that rate decision largely factored into the market. But let's look at the key focuses of the CBK with regards to their inflation outlook. What was mentioned as the key supportive factors for inflation continuing to trend down?
Sorry, come again?
What did the CBK governor mention as the key supportive factors when we're looking at inflation coming down?
Well, I think we did expect the CBK to continue holding steady the rate, and we think that the fact that the CBK has been very active on the market means that we are looking at the shilling either holding steady at below 85 shillings and going towards 80 shillings. I believe that this is actually a good move. We do expect that going towards the end of Q1 and towards Q2 of 2012, then we can expect to start seeing interest rates coming down. But right now, it's all about keeping liquidity levels lower, credit levels lower, so that at least the economy can sort of cool down and inflation can remain under wraps.
The private sector growth declined in December 2011, and as you mentioned, it has been coming down, but it's still a lot stronger than where the CBK would like it to be. Are there any indications of at what level they would be happy to then start cutting rates? And of course, that would mean then a softening in the cost of loans for consumers.
Definitely. I think they've held it steady, I think, for the last 2 or 3 meetings. And I think that going into the next meeting, we do expect either to see them begin to bring interest rates down. We've already seen the fixed income and the interest on bonds begin to settle as well. And so I believe that going forward, we should expect interest rate cuts. And I believe that this will be also good because we need to sort of keep the economy at a level where we can actually attain the sort of economic growth that is envisioned for the year.
Let's look at the red flags, though, because, of course, we've got the concerns around the Strait of Hormuz in Iran and that potentially blocking off oil production. You've still got the ongoing Eurozone crisis. And then you've also got the meteorological department saying that we could have a dry spell in the country. Surely that would be one of the biggest red flags, given the fact that inflation last year surged as a result of higher food costs.
Well, yes, we are really hoping that it doesn't turn out like last year. We are hoping that, first of all, we know that there is a lot of uncertainty in terms of where oil prices are going, especially with the issues that are still happening in the MENA area, Nigeria, and hopefully that we are not going to see any rise in and fuel prices, but we have seen 2 consecutive declines in fuel prices, which is good for the market. I believe that a dry spell would not bode well for us at the moment, and that would really reverse a lot of what has been done to sort of support the shilling and reduce inflation. But we're also seeing very strong exports, especially from the tea and coffee exports, which is a good thing. It means that we're having good dollar inflows. We are also watching to see how the flour industry, which I think in the last 2 years has been affected heavily by, first of all, we had the Iceland volcanic cloud, which messed up, and you know, all those issues that have caused us to actually not make as much as we could on both horticulture and the flower industry.
Yep, and government looking to get a piece of the growing pie when it comes to earnings from the tea and coffee sector. They're looking to introduce a 1% levy on exports and imports. But of course, this is going to have impact on the likes of Williamson Tea and Captura in terms of their earnings going forward. Would that have any negative impact on their stocks?
Well, these companies have been around for a very long time. They have a sort of foothold in the areas where they operate. But then the thing is, they have very small shareholder numbers. They have very small shareholder books, and which means that usually shifts in the prices of these stocks they tend to actually react to maybe a very small trade, maybe even 500 shares trading on a stock like Williamson Tea could shift the price up or down by even 20 or 30%. So it's really about those shareholders who are holding, but they have held on to these stocks for a very long time. I don't see them, changing their stance because of, some policy changes. I believe that they're in it for the long haul. These alternative investment market segment stocks, and they are smaller capital base,
yep.
very small shareholder books, so usually we don't see that sort of shift coming from market dynamics.
And as you say, not very liquid stocks. One of the big caps that continues to be under pressure is Kenya Airways. We know it's got that profit warning there, and Fly 540 is a low-cost airline that has said it's now wanting to repackage itself on the African continent. This would basically just mean more competition in the low-cost airline space, and would you see this as potentially undermining KQ's plans to launch its own low-cost airline this year?
Well, KQ already has a niche in the business travel segment of the airline sector in our region, and I believe that usually with KQ, you find that a lot of the business tourism tends to happen via KQ, and that is an important niche that they have cut for themselves, and I believe that they can manage to uphold it in the fact that they have a very strong network presence and they already understand the market. I also know that I know that there is, of course, a growing presence of cheaper airlines, and I think this will probably also eat into the road and rail travel, where we're going to see more people opting to fly because of the time factor, which is more the way I expect it to go than these cheaper airlines actually eating into Kenya Airways niche areas.
Let's move on to the banking sector. We saw the CBK governor saying yesterday that the measures that have been taken by the Kenya Bankers Association to cushion borrowers have meant that there's limited threat of loan default. Is this likely to boost appetite for banking stocks where there's been a lot of concern around the impact of high interest rates on their loan book?
Well, yes, we do hope that we're not going to see major defaults. I think one thing is that most of the banks have gone and restructured the loan payments, and that will also reduce on the level of defaults, which is actually a change from the past where we would have these loan payment structures cast in stone, and that would force people in times of high interest rates to default. So I think the banks have a new level of dynamism, which is very good for the market and which is going to actually cushion them from the sort of defaults you'd have expected a few years ago. I also think that going forward, since we do expect interest rates to start coming down, then that will also be a good thing for those people who are holding these loans at very high interest rates.
I mean, the likes of KCB still expected to report strong growth of 30% for their full year. I mean, those numbers are really impressive. No wonder we've seen a lot of appetite for the stock. Very quickly before I let you go, your appetite for investing in indigenous banks over multinationals?
Well, I think I'm currently feeling more. There's that feeling of the conservativeness of Barclays Bank, and Standard Chartered works for them in times when they expect a bit of a higher level of defaults, in that because they have a very strong presence in the corporate sector. So I do expect to see more action in that area. But I think seeing that, for example, equity and cooperative have attracted a lot of funds coming from outside the country, that is going to work well for them, because they can actually be able to continue to grow their loan books, because they are able to at least support the whole that is coming from lower deposit rates and lower and higher interest rates. So I do think that across the board, I know Standard Chartered didn't do very well in Q3, and I know that NBK did not do very well, but I still expect double-digit profit growth.